But if you have a project starting March 1st, for example, you might want to start thinking about applying for some sort of business financing at least a month before. Very often, small business owners will come to us 2 days before a project starts, and they'll be in a mad panic for what they need to get started, for example. So it's probably best not to wait to the last minute, because if you do have less than perfect credit, whether personal credit or business credit, it could impact the dollar amount that you qualify for your project, or you could get declined, in which case you have to go look for another financing provider out there to meet your needs. So I would say, if you need the money March 1st, then start looking at least a month before and start applying for a month before. Start doing research out, because there's so many different financing providers. We can't be everything to everybody. So, if somebody looks to finance, a $200,000 piece of machinery, even though our financing is unrestricted, lease financing is probably a better option for them, just because they're focused on financing specific hardware and we're not. I mean, yes, it can be used for that, but we're not the best use of funds for that specific business purpose. So there needs to be some leeway in terms of sourcing the right financing company for you or your project, and going through the application process and approval process, and also them doing their own due diligence on, what company is best for them.
That's actually a great point, doing the research. So, what are some other things that business owners should do before taking out a business loan?
Here's what they should think about, I think, because very often they'll come in and they'll apply, and our salespeople will say, well, how much do you want or need? They'll be like, oh, what can you give me? Well, I think business owners should only take a dollar amount that they want or need and not more, because ultimately, if you're going to borrow $50,000 or $100,000, it's going to cost, the repayment is obviously going to be much higher on the $100,000 loan than 50. So if my wife wanted to kind of buy $10,000 of inventory, and she spent $10,000 and then sold it for 20, then her profit margin is 10, and whatever our cost of capital is, the profit is, her markup minus our cost of capital. So it's pretty easy math. But if you're borrowing $100,000, using 50 for inventory and keeping the other 50 in the bank, well, that's costing you money, So you should just take a dollar amount that you need or want. And let's say, again, that $50,000, maybe take 55 because unforeseen things happen. For example, if you're taking 50,000 to do a renovation on a restaurant, renovations have unforeseen costs. So maybe take a little more, but just a little insurance for unforeseen circumstances. So focus on the dollar amount that you want or need. Make sure the repayment amount, if you're approved, is manageable. And you as an owner should do that, but we as a company do that for you inadvertently, because we're not going to approve you for amount, or a small business owner for amount that we feel they can't repay. I mean, ultimately, we'll look at a business's existing cash flow and sales monthly and weekly to determine, along with other variables and factors, how much we feel they can repay. If you're taking too much money and you're going to have a hard time repaying, we're doing more harm than good. And our intention is to help small business owners and to do good by them, and not to make their life more difficult by providing them more money than they need or want, and to put them in a scenario where repayment is difficult. Also, they should look at what the cost of capital is. Cost of capital with us is a little more expensive than a bank. So does it really fit your business purpose? Do the analysis. What is your return on investment when you're taking our money? What are you doing with it? And if that return on investment exceeds the cost of capital, then great, it makes good business sense. Then I think it's something that it's a win-win, and we should both move forward. So those are some of the things that I think small business owners should think very seriously on, because again, very often, if somebody comes in looking for 50 and they have great credit, we can approve them for 100. Some business owners will want to take it. And that's, I think, a mistake. That's when you need a line of credit. Take a line of credit, and that way it won't cost you money. I think some of the mistakes that small business owners make, financing providers are all trying to provide a frictionless experience. How do we make it easy? How do we ask for, limited number of documents to get somebody approved for the amount that they want? But I think very often that creates a bit of a race game between us and other alternative lenders. So let's say if you owned a business, it would be smart of you to go to more than one financial provider to submit an application to see what you're qualified for, because not everybody could approve you or could approve you for the amount that you want. So our salespeople are put in a scenario from time to time where a business owner said, well, your competitor, approved me yesterday. If you don't give me approval today, then I'll go with them. and they'll value speed over the offer, and I think that's one of the biggest mistakes business owner makes, because different companies could provide you different value add services, so we may be a better fit than a competitor because of intangibles or policies that we have in place. If they took a little more time to evaluate all their offers and some of the intangibles that each of us offer, then they would find a better solution for them. When people ask me what makes us different from our competitors, I love that question, because we are different. It's not just what's the cost of your loan compared to your competitor, How do we treat you in the long term? Because we don't want you as a short-term client. We want to build long-term relationships